You don't have to ride these trades all the way to 300%. But you can see here, it's like 30 years of gains, right? $22,000 net profit on one ES contract this year is fantastic because that's 145% gains. This is like 14 times what you would do in the normal stock market with buy and hold on just 42 closed trades using our indicator HappyTrader.io and using these really simple alerts that you can set up once per bar or once per minute. It's these top 4 alerts here. What's going on? It's Ryan here, CEO and head quant at HappyTrader.io. Today, we're just going to keep it short and sweet per the usual and just show you how our indicator is doing this year. This is the top performing indicator on TradingView. And we're going to go ahead and demonstrate that by looking at 3 different securities. The first one we're going to be looking at is the ES futures, the E-minis, the good old E-minis, and you can also trade the MES. So if you want to trade 1/10 the size, go ahead and knock yourself out, right? So the first thing we want to do with the ES is we just want to go and whatever broker you're using, you really want to be doing these back tests off of your margins. So let's go ahead and just find ES here on Trade of 8 margins. And there it is right there. And our overnight margin is the one that we're going to want to plug into our back tester to see how we're actually doing year to date. We're going to be doing a year to date back test for 2024. And we do a lot of these back tests. We're going to go ahead and clear everything out. And we're going to go ahead and set that initial capital to that margin requirement. You could pad it slightly depending on whether or not you think you may get a margin call, or you just rely on your broker to tell you that you have a margin call. Typically, we do not draw down excessively as far as right off the bat when we put the trade on, but your results may vary and that may not be the case. So make sure you're adequately capitalized and not oversized. Again, this is not financial advice. This is for educational purposes only. So we're going to do one contract. We're going to set pyramiding to 0. And that's all we're going to do. We're not going to do any scaling in or scaling out for the ES. We're looking at the 45-minute time frame, more of a swing trading time frame. And that's how we're going to go ahead and proceed with this first back test. Let's go ahead and load it up. We want to make sure deep back testing is on. And we want to make sure that we set the date to the current date. So we're looking at 2024, January 1st to 2024, 0828, August 28th. Y'all, we are cruising through this year. So let's go ahead and cancel that out. And we can see a nice, really pretty back test here. This one, in fact, did not even go into the red at all. You would have not have been margin called. And typically, if you are with HappyTrader, if you follow along with the channel and see our back tests on all these different securities from equities to crypto and everything in between, you can see that a lot of times on these macro charts with these long onlys, even within the course of 6 months to a year, you get a lot of these where you will draw down on your profit, but you're never going to have to put on a delta hedge. Now, if you want to know what that is, subscribe to the channel. We're going to show you how, when these trades do go into the red, how to manage them until they go back into the green. So just to look at this particular back test, obviously, $22,000 net profit on one ES contract this year is fantastic because that's 145% gains. What is 145% gains compared to what you would normally get in the stock market? Well, it's like apples and oranges. This is like 14 times what you would do in the normal stock market with buy and hold on just 42 closed trades using our indicator HappyTrader.io and using these really simple alerts that you can set up once per bar or once per minute. It's these top 4 alerts here. So they will just ring on your phone, send you an email. You can do automated trading with webhooks, and that's why we developed this for TradingView. It is the best platform out there in the world, and we make the best indicator in the world performance-wise, and that's why we do these performance videos all the time, every single week. So we have 42 closed trades, like I mentioned. We do have a max drawdown of 46%. On a long only, you're going to get max drawdowns. On the long and short, you're going to get less of an overall return. So my trade-off is, hey, I'm willing to let this entire account draw down because I know over time that core position is going to be up above water. So even if I get a little choppy here, have to put a hedge on and maybe have to go short 10 MESs, I can start to peel those off during another upswing like this. Now, obviously not here. We'd want to leave those hedges on. And once we start kind of getting percentage points out based on your risk tolerance, of course, that's where you're going to be able to start to peel off any of those hedges. And we can see if we go down to, let's just do the 15-minute chart, see what that looks like. Yeah, you can see here. So you can delta hedge right here. And then right here isn't enough for me to start pulling a hedge off. I need to see more than that. A lot of times it's going to be like a double bottom right here. You can see where you just have this weak up move and then just boom, you go back down. So when you get to where you're a couple percent up, you can start to unwind that hedge slowly, but you have to be careful, keep an eye on the trade and make sure that when you go back down, either you're taking profits, take reasonable profits. If you started with, let's say, $15,000, whatever, and you have $27,000 within the course of not that many trades, maybe you want to take some profit off the table. Again, I'm not telling you how to trade, but you can see that as you go down in time frame, the point of the story is, you're going to have to do a lot more hedging because there's a lot more chop, right? So you can see that here too. And just in general, even when you're in positive expectancy. So even though the overall return is higher, you're better off with HappyTrader using the 45-minute chart on the ES. We're going to look at a couple other instruments as well here. So no margin call. We did have that dip, but it was less pronounced. The curve is a lot smoother using the 45-minute chart, right? With the long only, the markets tend to drift up over time. Yes, the markets can crash. And yes, that's why we use things like delta hedging, protective puts, depending on the style of trade. So the next thing we're going to do, the ES looks great, 145%. This is wonderful. One more thing I wanted to touch on, percent profitable, 42%. Market might be a little overheated. You can see we're way up here, lots of profit, right? Probably going to be due for some sort of either a short consolidation, then a pop up heading kind of into the election period, or we're going to see kind of a little nervousness, what might happen, and we could see another chop down, maybe even a retest of this area here. So I think we're out of this zone, and we are looking to maybe test either halfway down or maybe all the way down in this zone, or we're just going to go down, get some good news, boom, and it just goes up, right? We don't know. The market is random. So let's move on to the next security, which is going to be the NASDAQ. We're going to look at big tech futures. So we're looking at the same exact thing. The only thing we have to do is change our margin. So we have to do NQ instead. And we're just going to find the NQ, and it's right here. You can see that the overnight margin is a lot higher on the NQ because it's only a basket of 100 tech stocks compared to a basket of 500 stocks. Okay. So we're going to go into our strategy tester. We're going to do the same exact thing. We're going to change that margin, keep it to one contract, keep the pyramiding to 0 orders, and then make sure that our date range is set and our deep back testing is turned on. The other thing we like to always check is that when we have our back tester on, that it's lined up directly with these uptrend and downtrend signals. It's super important. And you can see that we have our close entry. We're just buying on the uptrend +1. And you can see if we remove the back test, it goes immediately away right from these signals. We're not trading these signals that look like super trend type indicators. We're trading our signals, which are our sentiment AI signals, uptrend and downtrend. Again, you could just set alerts for these signals right here and right here for potential trend reversals. And what we're going to do is just run that report, see what we're looking at. Okay, so here we go, right? So big tech, it's around the same number of trades. Now, 39% profitable. This is something I didn't go over in the last back test. If we go to the list of trades, you're thinking 39% profitable. Do you have a positive expectancy of 164% year to date? Well, the key is that HappyTrader was designed a little bit different in that your winners are going to dramatically outperform your losers on an average basis. So you're going to get more losing trades. You can see a huge string of them there. But if you can get around that hump and if you need to position size to the MNQ instead, right? That would be something that's 1/10 the size. So you don't have to endure, instead of a $1,000 loss for a week straight, you might have $100 loss for a week straight, but then you're going to get a $2,400 winner. This one's a $24,000 winner because it's a full size contract. So you get the point. Now, to see what that overall expectancy is and just how good HappyTrader is as a whole, you can see that the average trade expectancy year to date on the NASDAQ using our indicator is $884.65. 0.25% of the entire, margin utilized, right? So super efficient. Now, percent profitable, we generally like around 1 out of 3 trades. So this looks a little overheated, kind of like I was saying before. And, you can do your technical analysis. This is a weird pattern, though. Typically, these can slope down, kind of the same right here. It's kind of, a little bit different. I don't know if you're into technical analysis, but I certainly am. And, doing all this quant stuff for so long, you do start to see patterns in the technicals. So it's not all voodoo and crazy stuff like people make it out to be. So another great back test. It's about 10 years of gains on buy and hold in your normal IRA. And you can achieve this with 43 trades using HappyTrader. We do have automation coming soon. That's going to be something announced for traders who are busy on the go or might just want something set up for them that is kind of set and forget. So the next thing we want to do is just kind of drill down again, like we did before. Let's go down to the 10-minute chart, see what we're looking at here. It's just beautiful on the NASDAQ. We perform really well. We did have to put on a delta hedge here. And then you can see as soon as you get this big updraft, you can start to pull that hedge off and it should draw back down to baseline. You can put that hedge back on. Yes, you will endure some chop. There's just no free lunch on Wall Street. Now, what I like about the 10-minute test is that we have 33.50% profitable. The drawdown is way more manageable. And again, you can take profits on these trades. You don't have to ride these trades all the way to 300%. But you can see here, it's like 30 years of gains, right? In 8 months. So in almost 9 months, right? So you just really have to kind of weigh out what you're doing right now. Now, something I want to touch on here is total closed trades. 200. That's going to start to eat into commissions. A lot of futures brokers charge $1.25, $1.50, $1.65, whatever. Some of them are negotiable. If you pay them up front, you can get a lower rate, whatever. You're going to need to calculate your commissions here. That's going to eat into your profits. But when you're making 307.14%, it's really not that big of a deal. So, take it as you may. Now, again, we have a low win rate. So anyone who's out there claiming 98, 99% win rate, no, 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 run for the hills, because that 1 or 2% is going to be like picking up pennies in front of a steamroller, as they like to say in the world of investing. So 36% drawdown, I'm happy with that. Average trade expectancy, this one's a little rougher, but still really good. I mean, of all of those 200 trades, for the average trade over all of those trades, even the losers, to net $354, that's really good. Now, when I say rough, that's just you having to look at these red trades in these strings, right? When we're taking a big drawdown, but then you're getting paid off on those pops, right? So patience is key, and so is position sizing. Again, you can use the MNQ, which is, 1/10 the margin, it's 1/10 the size, 1/10 the loss, 1/10 the gain, right? So you could scale in and practice your hedging using smaller account size if you want. Now, the last thing I want to look at, let's see if we have time. Let's get into Bitcoin. Let's take a look at it. The margins are really crazy with Bitcoin, so it's not really our go-to, but let's go ahead and just take a look at it for transparency. You can see the margins really, really high for the overnight margin for Bitcoin because it's just so Wild West with Bitcoin. We will still do our back test. It's going to be on that initial capital, one contract, and then we are going to just go ahead and run it and put it out to the 45-minute chart. Let's stick to the macro on this one here. And let's go to the overview. And you can see just really choppy, still really good, still beating the S&P 500. Average trade expectancy, really good. If you're someone who likes to make on average, a lot of money on a little bit of trades, with it staying within normal Happy Trader conventions, this is going to be perfect for you.